raise your hand. We we have John, who is our Director of Membership, and we also have Maida, who is our Public Affairs Manager. And because we just started recording, I'll go ahead and reintroduce myself. I'm Allison Mize, Director of Public Affairs, and welcome again to the Biodiversity Credit 101 webinar. So the Ecological Society of America is the society that provides the glue throughout people's careers in the science of ecology. We primarily have academic members, but we also have practitioners and those that work in policy. And so we're always trying to find opportunities for our ecologists to try different areas within ecology, or to also learn about emerging and important topics in ecology. ESA sent its first delegation to the Biodiversity COP16 in Cali, Colombia this year. We had almost 20 ecologists attend. It was one of the largest delegations down there, I think. And the COP16 meeting is really where the biodiversity credit market is emerging. There are all these peripheral meetings held in conjunction with the COPs. And we met Ryan down there, and so we quickly asked him if he could present on biodiversity credits, which he said he would. So let me go ahead and introduce our speaker. But before I do that, if you have any questions, if you would please just put them in the question box, and we'll monitor those. And unless it's something that's necessary, Ryan will probably address those questions at the end of the webinar, but please do go ahead and put your questions in there. So let me tell you a little bit about Ryan. He's building a biodiversity credit market in the US and abroad, following many years of focus on balancing habitat conservation and resource extraction in international land use. Previously, he was at the World Resources Institute, leading private sector engagement in Latin America for the Global Forest Watch. And he also helped develop the GFW Pro for corporate and financial sectors users to reduce tropical deforestation, focusing on soybean and cattle supply chains. Supply chains are really important. He has had previous stints at the Inter-American Development Bank, World Wildlife Fund, National Wildlife Federation, and the forest carbon industry. He currently works with an organization called EPIC, the Environmental Policy Innovation Center. They're really doing very cool, innovative things. And their expertise is on wetlands, habitats, species, markets. And Ryan is serving as their biodiversity credit expert and working with credit developers, investors, and landowners to help bring this market to fruition and make nature a reality in this emerging market. Ryan is also a fellow ecologist holding a degree in biology from Cornell and a master's in environmental science from Yale. So please go ahead, take it away, Ryan, and thank you so much for speaking with our ecologists today.
Thanks very much. Really appreciate the invite from Allison and Jonathan and the ESA team. I would not quite characterize myself as an ecologist, but did have quite a bit of education in biology and environmental science. And I do like spending time with ecologists when I can. I work at a place that, as Allison said, the Environmental Policy Innovation Center. And we focus particularly on trying to speed up the implementation of policy in areas that we find critically important: restoration, water quality, and a few other areas. And we have a team focused on restoration across environmental markets, environmental contracting. We look at things like the wetland mitigation markets. I'll talk about that in a bit. Payment for success contracting, permit reform, trying to find ways to speed up restorations, speed up how government policy and private sector can work together to get more restoration actually happening on the ground. And we have largely focused in the US, but I've been looking at our markets abroad and slowly connecting what we do to parallel markets and peers in other countries, including England and Colombia and elsewhere. So I'll jump into my slides here. And please do throw as many questions as you like. I'll try to cover what I think ecologists will be likely interested in, but there's going to be questions galore here. So all that would be very welcome. Let's see if I can get this connected well. Okay. Is that showing full screen?
Yeah, Ryan, you're good to go.
Great. Okay. Let's dig in. So I did have the opportunity to do a bit of field research back in the day, and spent some time doing radio telemetry and things like that long before we had tiny devices what that could transmit to cell towers. So I worked on birds a bit, worked on rattlesnakes, was assisting other folks' projects and thought I would go into ecology, but traded the glamorous life of a field assistant for the glamorous life of ecological and restoration policy, and ended up working in a few different areas, including tropical forest, deforestation issues, particularly in supply chains in Latin America, and how that connected to corporate sustainability, trying to figure out where we can actually make progress on the impacts to biodiversity, the impacts to forests and broader areas like that. And that led eventually to working on carbon markets a bit and now to biodiversity markets. But it's been one long journey where I've been focused on trying to figure out interesting and new and more effective solutions for the biodiversity crisis. So when I give this talk or similar talks to audiences that are not ecologists, I'll show a picture of a buffalo, maybe some longleaf savanna, things like that. I'll show some range maps and the reduction in range. These are things well familiar to this crowd, so I don't need to spend too much time on it. But needless to say, things that that I would usually say are no. This is a crisis of vast proportions, and we usually think of an approach where we look at things like this, protecting, using protected areas, looking at ecosystem protection as a whole. And part of what I want to talk about today is this complementary approach to dealing with the impacts we make and restoration as a complementary priority. We think that the tent is big enough to look at ecosystem protection and ecosystem restoration and the ways that they can integrate. So nothing I would say today is intended to be contrary to the very successful strategy of protected areas, hotspot analysis, all the things we do to try to keep these last great areas intact and protect them. But I do want to get into the ways that we might see ecosystem damage and how we can address it more effectively in this context. So this is a slide in part intended for layperson and layperson language, but what it's getting at, I think, is a general way that impact can be understood and the ways that society, the government policy in the US and pretty much everywhere else in the world approaches this. And as folks who really care so much about biodiversity, keeping these last great places intact, looking at the holistic level of damage we're causing, we want to think, what is the status quo? I always come back to what is the actual baseline that we're dealing with and how much can we mitigate it? And I'll admit it took me some time in my career to come around to the idea that there is a role for environmental markets and there is a role for pricing ecosystems and pricing biodiversity. But I definitely started out thinking, you know, let's hold off impact. Let's prevent the impact in the first place. Let's not set up systems and policies that will facilitate it, but let's truly, you know, protect what we can protect and keep fighting that good fight. And that fight goes on, and I think it's a good and noble and good direction overall. But we want to be realistic about how government policy in the US and elsewhere actually addresses this. And then what are the options we have to mitigate that damage and then internalize the price and the cost of biodiversity and then turn that into better outcomes overall, right? So I won't go through every piece of this, but it gives you an idea of the kind of options we tend to understand. So you might have to pay for the damage you cause. That could go into a fund, for instance, right? That's something like in lieu fee funds we have in many states in the US. You can try to prevent all damage. You can completely restrict the impact from kinds of projects that might be seeking environmental permits, or we can just allow it, or we can, have a mixed use of these strategies, allow some things, protect certain things, and we do that in the US. So we have listed species, we have protections for wetlands, but in most ecosystems, in most contexts in the US, there's no restrictions on what you do to those ecosystems and how you affect land use change, cut down the forest. You have a lot of flexibility in the US. In other places, you may have less or more, but we cannot fundamentally hold back all ecosystem change and ecosystem impact. So what can we do, right? So this will be familiar to probably most of you, the mitigation hierarchy. This is often used in how we affect policy in the United States and in the way that we're thinking about climate change and the way we think about biodiversity impact in corporate supply chains and writ large, right? So the yellow there is the predicted impact. And then as we move from left to right, we're looking at the approaches we might use to reduce or rather minimize and avoid those impacts. But you'll see as we get to that fourth bar from the left that there's still some yellow, there's still predicted impact, right? This residual impact, I'll come back to again and again, because I think the mentality often of approaching this problem as a fundamentally problem of we're not restricting enough impact misses the point that we cannot avoid this residual impact, and there will always be residual impact. So what can we do? We can put a price on it. We can offset it. If we do it right, we can actually get a net gain and create a system whereby the market actually produces a net gain. We cannot replace an ecosystem holistically. We cannot fully recreate any kind of ecosystem in any kind of short time scale, especially things that took thousands or millions of years to develop. But we can do a lot better than we do now. And we have markets that can tell us how to do this effectively. And that's kind of what I want to talk about today with biodiversity credits. So before we get into credits themselves, I want to talk a bit about markets and pricing biodiversity. Needless to say, anyone who approaches this from kind of basic economics, the biodiversity is undervalued and its cost is externalized. So profits are internalized and the cost of biodiversity is externalized. We don't put a price on it generally. And where we want to legislate and restrict those impacts, we can do that to some degree. And we should do that to some degree for areas that absolutely cannot be replaced or are already so threatened that any further impacts are just going to create terrible trade-offs or terrible downstream effects. And we should absolutely protect things holistically when we can. But we cannot legislate away all the trade-offs or halt all impact. So we need markets to be well regulated, then they can address this undervaluation. We can channel those investments into restoration, right? That's part of how we think these markets should work, not necessarily just merely pricing them and creating a fee for that, but we need to channel where that fee goes and where those investments are made. And if we do that right, we are creating the right incentives to reduce the loss of threatened ecosystems in the first place. So this is a critical synergy between the two strategies of preservation and restoration, or restricting impact, or putting a price on impact. And if we do it right, we are reducing the impact in the first place because it's costly for those who might want to cause those impacts. And lastly, restoration needs to be a priority. We need to think about the amount of global land use that is currently degraded or land and ecosystems that are degraded, and marine systems likewise. So depending on how you measure it, enormous amount of both terrestrial and marine systems are degraded. We need to be investing in them for all sorts of reasons. And for strategies where we're thinking about preservation, we need more connectivity in this Swiss cheese matrix that we've created. So targeted restoration can fill in those blanks. And from that, we can get better provision of ecosystem services, things like climate mitigation and so on. So a lot of this is super familiar to everybody on this call. So biodiversity credits themselves. This is a funny topic where ecologists and probably every other group that's heard about them might have a sense of what they are a priori. They might have initial reactions to them. And I think I did way back in the day. It sounds like carbon credits, right? Are these entirely new? And are they, if not carbon credits, are they something for charismatic megafauna? Are there chimpanzee credits and jaguar credits? And we're going to get into all these issues. A thing to stress here is that the credit represents a measured and evidence-based unit of an outcome that is durable and additional to what would have otherwise occurred. That's this counterfactual aspect that is philosophically tricky but critical to keep in mind. They're not new. That's something I'm going to talk about quite a bit today, that we've been doing this for quite a long time. The current market size for what I would consider biodiversity markets in the US alone, it's about $3.5 billion. So this is not entirely novel, but I am going to talk about voluntary markets that are definitely new territory. And then finally, are they like carbon credits, right? And do they have the problems of carbon credits? There are some similarities. We can learn from the mistakes and the virtues of carbon markets. They've definitely had a rocky road over the last number of years, so we don't want to make those same mistakes. But what is transacted are the holistic ecological outcomes. Even when there's a species focus, we're still talking about a holistic measure of the habitat and the ecosystem, not single organisms, and we're not transacting the biodiversity itself, which is a critical point. All right, what's the potential? Some folks see this as it's merely another source of funding. All we're going to get is another way to get funding for the things we already do. So there's an aspect that's true there. We want to expand the pie of who's contributing to biodiversity and the different strategies we're working on. So how can we do this and go beyond philanthropy? Philanthropy has a role to play. It's really critical. Public funding obviously has a role to play and is really critical. It's not been doing so well as of late. But we want to create a path for the private sector to internalize these costs and pay for them and channel those costs into positive biodiversity impact. Efficiency and investability. Creating a market out of it makes this investable, and it makes a professional class of practitioners and credit developers that can do this in an efficient way, that can do it in a highly large scale and professionalized way, right? That's what we're really aiming for. And that already exists in these markets that I'm going to talk about. In the long term, if we're successful with mitigating climate change over the long term, it's going to take many decades. But if we do it right, eventually carbon markets will wind down, right? We won't have to price carbon the same way. But we will continue to have land use competition, marine resource competition, and we're going to find that we can never completely evade those trade-offs. So continuing to price biodiversity in the long term is a sound strategy, I think. So current markets, that these currently exist, this is not new. I'm going to make this point over and over and over again. There's about 2,000 different banks across the United States already, right? These include wetland mitigation markets under the Clean Water Act. We call it 404 legislation. And also 5% of that number are habitat banks for species, right? Managed by the Fish and Wildlife Service. So this is already a large scale market. This is not new. We don't call these biodiversity credits, but fundamentally the way that they're built, the way they're transacted, all of these are things that really could be considered biodiversity credit markets. And this market and the way that these are built and transacted is a model for how we should be doing the voluntary credits that I'm going to talk about in a moment. Just an example of the wetland banks. This is North Carolina. A lot of these areas have been experiencing a lot of development. I was in Raleigh, Durham area last week, and there's a lot of new housing developments, and they're going to be impacting waterways and things like that. And out of that, we get a lot of impacts. But where wetlands are impacted and the Clean Water Act is invoked, we have a demand for these wetland banks. So this is just a map of just North Carolina. And this is replicated not everywhere in the United States, but much of the United States. Each of these represents an investment in restoration, which is fantastic. The goal for all this is no net loss. And are we achieving that? There's been analysis of that. We're not necessarily getting all the way there, but we're doing so much better than we would otherwise without the existence of these markets. And for species, here's a quick x-ray of some of those species out there that are transacted in species markets. Of course, these things can be controversial. There's not even an agreement, say, within the Fish and Wildlife Service, and I'm sure folks on this call might find some of this objectionable for all these different reasons, right? These are listed species, but there are ways that these things are transacted that can create more habitat for these critical species. All right, so what does that look like in practice? This is a bank from Westervelt Ecological Services. They're creating a wetland, right? This was not a wetland prior, but they created one there in relatively soon after the creation. It's attracting invertebrates. You get migratory birds. You can also do create species habitat for particular species. All of these are popping up all over the United States, and it is not a complete replacement for what was there before or what it is being offset used or what the offset's being used for rather, right? But it is far better than the alternative, which is that these impacts are allowed to proceed and they're not offset and they're not compensated in any which way, right? So these are actual ecological resources, arguably their infrastructure. They have all these different ecological services that they produce, including habitat for species. And at least through the Clean Water Act, the way that these are defined is to be holistic. So they include the species that live there, the hydrological provisioning, the water filtering, the carbon, all of this together. So essentially, I would say a biodiversity credit project. In the bottom right, you'll see a mention of the Quebec Pension Fund, and I'll get into that. This market is in particular so robust that it is considered a trustworthy investment. So these are all investors, large scale, many of them are pension funds who have found the US market investable. This is something I'll typically show to a more business-oriented audience, private sector corporates, and sometimes investors, because there's a lot of talk about the investability of nature. And fundamentally, I see that as a pro because what we're getting out of it is more money going into restoration, more money being committed to improving ecological outcomes. Pension funds in particular are not particularly open to a lot of risk. They are things like public servants' retirement, and what they will try to do is find secure, relatively low risk investments. And many of them have put their funds into things in the U.S. markets, this market in particular, wetland and species banking, because they have found it a secure place to make their investment. And that's a fantastic sign. So at the COP, in Colombia, there's a lot of talk about getting more private sector investment in nature. And those of us familiar with this US market are screaming, we already are doing this and we know how to do this. This is not something that's merely hypothetical, but it's already happened. It's been happening for a long time. All right, so what is a credit? This is often where ecologists want to poke holes in what's going on and have like really good questions, and we'll get into all this. What is being measured? How can we turn the extraordinarily complex ecology of any system into something that is, if not commodified, it can be put into a relatively standard unit in context and transacted? What can that possibly mean, and how can we define it? So the idea is to have a practical and good enough unit of ecological change that is the outcome from the baseline to the latter state in the development of the bank. The outcome is transacted. Again, it's not the biodiversity itself, but it's representing the change that has occurred. Now, the simplest methodologies for either regulatory markets like in the US or in England, there's a biodiversity net gain policy, which is even more holistic than the US that kicked off last year. Or for these voluntary markets I'll talk about, this is a measure of area, is kind of what everything is built upon, an acre or a hectare. And then there's lots of other measures that fit into that will adjust what it is that the restoration should represent, how much is that valued relative to other acres, overall species diversity, abundance. You can have forest structure, things like that. All different ways to do it, as complex as a bunch of ecologists trying to figure out to measure any one system. There's all these different ways to look at it. There is no singular answer that will say this is the way to do it, but there's a lot of very good processes and approaches that definitely can work. And we have that track record from looking at how the US markets have done this. So requirements are some of these methodologies. For those of you familiar with carbon credits, It's a similar process in the sense that there are a lot of methodologies popping up. There is no single methodology, and we will take some time to ensure that we have a very high floor for quality. We want to make sure that the methodologies that are picked up and any kind of consensus for the market is built upon the quality methodologies. But we have a lot of good ones out there, and we're learning all the time. We're going to be testing some of these methodologies this year. So one example is England's metric for biodiversity net gain. This has been in development for some time in England, and it's oriented towards England. But there are applications of this similar to this that can be applied elsewhere, but it's instructive. Plant species diversity and abundance, it relies in part on the fact that English botanists know their landscape particularly well, and doing a botanical survey there is quite practical, right? That might be harder in, say, a tropical system, where diversity is much higher, but it works for England. It can be adapted elsewhere. Then we have Vera, a brand you might recognize from the carbon world, and they've developed a nature credit standard. They've been piloting it with a number of organizations, and they're releasing it for broader use later this year. It has a quality hectare, which includes both the extent and the condition, and that's where you calculate the units. There's a lot of flexibility in how you choose your indicators, but they're trying to give a mix of flexibility and specificity. And then finally, significance, ecological significance. It's a differentiator for credits, but it does not affect the number of credits produced in that particular context. So that's what the way Vera did it. Plan Vivo does it differently, and on and on and on. The good folks over at Bloom Labs and BioInt, they did a deep dive trying to describe all the different metrics and methodologies out there. And I'll show a few slides here on what they came up with. This will not suffice to get a full view of how these are done, but these are often developed by ecologists, and they're intended to function within markets, right? So that's a tricky balance, that it's not approaching this fundamentally through the process of scientific discovery, although we want to be testing these things. It's creating a way to measure things that is scientifically defensible, but can work in the context of a market that is not too onerous to monitor or to measure, and is understandable by those who might be transacting the credits on the supply and demand side. So biodiversity state, and then these nested ways of looking at it, different measures of ecosystem condition. This is a way to summarize, by the way, the collective set of methodologies, but each methodology uses a different subset of these. And slowly there's becoming a consensus about which ones are more favored or not. But there's many, many, many out there. And then thinking about it like a recipe, how you use these different indicators and metrics, how you calculate them, how does that produce a number of credits? And does that credit number depend, for instance, on the performance and the degree of uplift measured? Do you use indices? There's all these different pieces that go into it. And again, I wouldn't say that there's one particular answer. And one thing I'll stress is that there's often a misunderstanding of how these credits might be transacted, whether they are formally thought of as offsets or not. There's no room, I think, for having a fungible global market. With carbon, arguably, a ton is a ton is a ton. An impact on one side of the world can be offset, if you believe in offsets, on the other side of the world. But with biodiversity, these need to be fundamentally localized markets. You need to have ecological equivalency. And I've heard objections like, oh, we can't be trading a chimpanzee for a dolphin. And of course not, we won't. We will be working within like for like contexts in the same geography with ecological equivalency. And those are things that need to be guided by ecologists. So when we look at any particular methodology, what that credit represents is applicable to that system, and arguably could be offset for impacts in that same system under those same conditions, but not something that's distant in a different ecosystem or a different place in the world. So there's a lot to get in here. This is just to show you the variety out there. This is all too small to see, but I want to give a taste of it from the folks at Bloom Labs. But these are all the different ways that the formulas can be construed for how you're creating a methodology. Again, ecologists put a lot of the energy and thinking into this, and these are by and large being tested, and we're going to learn more as we go which ones are most effective. All right. So coming back to carbon credits and what we can learn from them. If you look at some of these integrity principles, some of these will sound like things out of the carbon market playbook. And often they're lessons learned from the carbon market playbook. Other things that are things we've learned from credit developers in the US in our wetland mitigation markets of how you go about ensuring that the market functions and your credits are really high quality and you're avoiding issues where you might be undercutting the market, having a really low floor for quality, having overly subsidized parts of the market that end up inhibiting entrants and investors to come in and make investments in this area. But the idea is that if we follow these general set of principles, and there's others, we can get high quality and low risk credits. We know how to do this. This is what I often stress. We're not entering into this blind, and we really do know how to make something that's good, that's durable, that is additional, that is something that is going to take place that would not have otherwise occurred, right? We want solid monitoring. We want to make sure management costs are covered. We want to make sure areas are protected. And we want to make sure that the actual outcomes are verified with third parties and that we are not just taking the word of developers that they did a good job, right? So we can go on and deeper into this. I'll show just one example of the complexity of some of this. Bundling and stacking, this is where we might, in principle, have more than one type of credit coming from the same acreage. And there's a lot of ways to do this. This is becoming attractive, I would say, to carbon markets in particular, because some kinds of carbon credits might be considered better than others, in part because they're creating more nature benefit. So where they can, they would like to say, have a carbon credit that comes with measured biological outcomes, or if they want to formalize it, a carbon credit that is bundled together with a biodiversity credit. We have generally advocated not to do this at this stage for the sake of having biodiversity markets kind of stand on their own and not be tied to carbon markets, but there's certainly been a lot of interest in it. My collaborator, Julie McCarthy, great ecologist based in Edinburgh now, she developed this, and we put out a piece on this about where we should think about bundling and stacking and what that really implies about different kinds of ecosystem services and where they should or could be thought of separately or together, and what the risks might be as we do that. But each of these subject areas, we're creating a community of practice, we're creating a better consensus about how to do them. And I think we're making a lot of progress on avoiding some of the issues that we had with carbon markets because we have a long track record to learn from. All right. Who is going to buy these credits? This is often one of the questions that pops up. It's always somebody in the back of the room raises their hand and said, yeah, but why is anybody going to buy these credits? So we'll look at a few classic rationales here. One is that they must. Regulatory. This is the current Clean Water Act and Endangered Species Act oriented credits in the US, or biodiversity net gain in England. I mentioned B&G because it is relatively recent and it's interesting in that it's holistic. It's covering all biodiversity rather than the US, which covers listed species and wetlands and streams. And they're figuring out as they go. They have a long track record of learning on this, but if you're building a housing development in England and you will be disrupting biodiversity above a certain size threshold, you're going to have to buy credits. And there's a lot of investors moving into the space and a lot of restoration happening. And it's exploding in popularity because it's regulatory, which is just a fantastic set of evidence for showing how this can work when countries approach it this way. You could say that they might buy credits because they want to. So this can be what we think of as traditional philanthropic interest or public pressure. This can be either because a company thinks this looks good in their sustainability report, there's a genuine civic virtue orientation, they want to invest in a local tree planting project. There's a long tradition of this. They can get good results, but typically they are not connecting the scale or the nature of their investment to the scale and nature of their impacts. They're often totally separate and on different ledgers, and they're not thinking of as an accounting exercise. We want to transcend that. They need to. So this is where their product actually depends on biodiversity. This can be everything from pollination services that the local biodiversity provides, the integration of the biodiversity's role in provisioning of ecosystem services. So if you have removed forest upstream, you might have water provisioning issues, things like that. And you might have supply chain dependencies that you might worry about. There's an argument that this is maybe more important than others. I think that smart companies have always done this and they will continue to do it. But I think the real impact will come from D, which is impact disclosure. So there's a track record for this through the carbon markets and through carbon or climate mitigation. But these acronyms here, the Task Force on Nature-Related Financial Disclosures, the Corporate Sustainability Reporting Directive, which is actually regulatory in Europe, and Science-Based Targets Network. All of these are pushing companies through various means to measure their impacts and disclose their impacts, right? This is a huge change. I worked for years on questions about deforestation and supply chains, and we were always trying to get companies to be more public about what their impacts actually were as a lever to get them to act on it. But they didn't always do that. They were reluctant to, right? But these initiatives that are often backed by investors, because these are considered material to the business, these are pushing companies to go in that direction, which is a fantastic sign. Now, they won't necessarily be formal offsets because if they're not regulatory, then they're not built into a formal offsetting context, and they're reluctant to call them offsets because they're not regulated by a government authority who can say that they are offsets, but we say, quote, offsets there, right? So we think of this, here's TNFD, for example. Won't get this too far into this, but you look at the number 6 there, the end of that process, transparently disclose, right? So that will lead companies to have better sense of what their impacts are, but I think it inevitably leads to action. It's not the same as a regulatory process that requires action, and it won't be every company. But once you have come out and said, these are our biodiversity impacts, there's going to be action on that through the mitigation hierarchy, and there will be residual impact. And that will lead an increasing number of companies to have to invest in biodiversity and do it in a way that is geographically and ecologically scaled to what the impacts they're actually causing are. So I kind of covered this here, but I think the path of GHG mitigation, I think that's really instructive. Companies first looked at it as something voluntary, as disclosure, and then behind that came more regulatory pressure. TNFD, for example, already has hundreds of companies, financial entities are signing on, and over this next year or two, they're going to be putting out their disclosure. And building on that, we can use the experiences we've had from habitat and species banking and carbon. We can use what we know about how to improve restoration through payment for success contracting, better monitoring, and we can get really good projects out of that. And we, as Epic, we're working with some pilot partners to create actual sites on the ground. And we think that will be a fantastic learning process and will create this sense of seeing is believing. We will know exactly what a credit looks like on the ground. So where do ecologists fit in? There's a lot here. I won't get through every little piece, but all of this relies on thoughtful application of the history of ecological science. What is the kind of restoration we want to do? How should we be doing it? How should we be monitoring it? What indicators should we use? All of this depends on the work of ecologists. I would imagine, I hope some folks on the call actually work in actual or active restoration, the restoration industry, though some of you are academics, some of you probably are restoration scientists as well. All of this needs to be brought to bear on how we do restoration, where we do restoration, how this is guided, and doing it in a way that is informed at every stage by ecological science. And yet at the same time, this has to be built into a market that works like a market. So we need to collaborate with other sectors, with the private sector, with investors. It's a very tricky dance, but I think it can be done. So what does that look like in practice? So Terrazos is a fantastic company in Colombia. They work in both a regulatory context and voluntary credits. This is in the northeast of the country, astounding biodiversity. These are some topographically complex areas in the northeast, isolated from the other parts of the mountain chain. So there's tremendous biodiversity, and some of this is former cattle ranch. And they have bought this area, they're restoring it, and they're generating credits from it. Really fantastic work. Carbo Biodiversity, a Swedish investor, their team did the first transactions of credits in Europe. And this is a site in Louisiana that they've bought, and it's got a mix of bottomland hardwood, cypress swamps, some pine plantations. They will be producing timber out of it, but they're really going strong on producing biodiversity credits at the same time in those sites. And what will come out of it is longleaf savanna, a high biodiversity understory, and real measured outcomes. Here's the last site here. This is Green Diamond, a forestry company. Like any forestry company, where can they get revenue? They sell timber, they can sell carbon credits, they might sell land as real estate, and hunting licenses and things like grazing fees, things like that, right? Can they get money directly for biodiversity? And historically, the answer has been no, but they're going to attempt it, and we're working with them to do this. This is a site in the Klamath Basin. To a non-ecologist, you might see this and say, oh, isn't that pretty? There's some wild horses in the background. I won't talk about wild horses right now, but this is not a holistically restored or good, healthy montane meadow, right? There should be a lot of other plants here. This should preserve water on the landscape a lot longer than it does. And this is the kind of restoration we're aiming for. And with willows, with aspens, we're going to get something that looks a lot more like this. And it'll be better for wildlife, better for ecological services, and be part of that greater Klamath Basin's restoration effort. All right, nick of time here. I think we still have plenty of time for discussion, but that was a lot. And I saw a few questions pop up, and I'll try to answer them bit by bit. But thanks very much for paying attention.
Yeah, folks. Ryan, thank you so much. That was awesome, as we expected. But for folks attendees, if you have questions, please enter them into the Q&A tool so that we can just kind of keep things orderly and kind of moving all in one place. Ryan, you should be able to access the list of open questions yourself. Frankly, I'm not sure where we would want to start in terms of the discussion. I will take some of the prerogative as a ESA staff helping to host and actually look at Mark Noonan's questions, asking who have been the traditional buyers of credits. And get, I think there's like a little bit more implicit in that as well, where if I'm like thinking about it myself, it's like who are the buyers, and then what's like the how does the market go beyond like credit is created, someone buys the credit, reselling, and the ongoing trade of the product.
I'll try to, I see some that are in the chat. I don't know if all the chat ones ended up in the Q&A. I'll just go to the Q&A. And if you put your question in the webinar chat, please put it over in the Q&A and we'll make sure we'll see it there. All right, let's see what we can do here. Okay, so question from Dr. McDermott. What evidence is there that these banks slow or prevent overall loss? So there's a lot of analysis of this. We know that in general, the applicants for licenses through the Army Corps of Engineers, the vast majority of them are able to reduce their impact to less than 1/10 of an acre, right? So because this has a price to buying these credits, they really do take steps to reduce and avoid impacts entirely. If you don't have to buy credits, your process is way easier if you're a property developer. For those that do and you buy credits, the question is, are we actually achieving no net loss? So there's been a lot of work on that, some from my colleagues here, including Becca Madsen. So this is an ongoing analysis. There's been efforts to do it. I think overall, the policy has not been 100% perfect in the sense that we have not achieved no net loss. But I would very confidently argue that it has worked far better than the alternative what we had prior to this, and the alternative in just about everywhere else in the world, where so much of wetland loss is totally unregulated, and the U.S.'s current status quo is built upon centuries of wetland drainage and just a huge loss of wetlands. So we've gone far beyond that, but it's not perfect, and they're working on it. Questions about expanding and adapting so it addresses all the planetary boundary exceedances. Yeah, I mean, once you start looking at it as biodiversity as a singular thing to be credited, singular in the sense of there's all these other aspects of nature and ecosystems and all the other parts about planetary boundaries. So I don't see why we couldn't, but it rapidly snowballs out of control when you're thinking about should we have credits for carbon and credits for biodiversity and credits for water. So I don't know the right answer about, or the specific answer about what is the ideal setting for that. I think when we do something like biodiversity credits that approach things holistically, we get many, many inherently bundled services out of that, including carbon benefits, water benefits, and so on. So I would hope we wouldn't need a singular market and pricing every single good thing out there that's a collective good. But you raise a good question. Traditional buyers. So yeah, that's a great question. A lot of states in the US, a lot of these buyers for the regulatory credits are things like highway agencies. So state highway agencies that originally were some of the folks tasked with creating the wetlands. And then it transitioned out of that into a private sector provisioning. So professionalized restoration companies create the credits and the highway departments will buy them. They're just one of the buyers. But if you're building a shopping center, you might buy credits. If you are, developing a housing development, any number of kind of things where you might impact a waterway, a factory, a data center, anything that might create that level of damage would in fact have to purchase credits. But there is a lot of public sector buying as well. So if the city somewhere decides they want to develop a site and that invokes Clean Water Act issues, then they will have to buy credits too. So it's good. It's the application is universal to both the private sector and the public sector as far as their responsibility to mitigate their damage, and the private sector can provide those credits where are needed. Okay, double counting and leakage issues, right? So yeah, I mean, leakage, I find that I wouldn't say necessarily intractable, but it's a very difficult problem because how you measure leakage, what is your marginal impact given if you're restoring one site amidst an agricultural landscape, will that agricultural land use simply move elsewhere? Is there any advantage you can make on the margins of actually doing that? There's a perspective that everything is just one vast pool of land, and any action is just going to push things around, and economic realities will override that. But I think if you're creating genuine value on the landscape, then you're creating competition. So if you are a rancher in Colombia, you're not making a ton of money from cattle. And if by shifting your ranch to a biodiversity credit site and you make more money, you could actually create leakage of that site. It's not a 100% solved problem, but it shows that biodiversity is a alternative land use and other ranchers might join in, and that's fine. So I'm not quite answering the question because it doesn't have a simple question, a simple answer. But I think to approach it as kind of a intractable problem and almost nihilistic, like any change will have no further effect, I don't think is the right approach. Not that you're saying that, right? Double counting. Yeah, so this is where we need to make sure that that there's a correct registration of credits. Unlike carbon credits, which can be bought and resold, we think biodiversity credits should not be bought and resold. So those who need them should buy them or want them should buy them, but we don't envision, brokers kind of buying up credits and then selling them on. And that will make registries less important. But we have a track record for how to do this effectively. All right, payment for success. Yeah, I threw that in there. Some of my colleagues work on this. This is a way to approach contracting. It's typical at state level in the United States to pay for restoration through, a grant to an organization that will go out and do that activity. Pay for success kind of flips it on its head and says, we're looking for this outcome. We want to have, this happens in the Chesapeake Bay, for example. We want to have reduction in nutrients. And one of the ways to do that, it's been modeled out, is say do repairing restoration that will reduce runoff next to a farm, right? And if you do that, you prove that you have done that repairing restoration a certain number of acres, and that fulfills the requirements of the payment for success contract that's open, and you are paid for that. And it's a way to make that market much more efficient, get what you need out of it, and avoid the issue where you have made payments up front such that you're then kind of unsure if you're going to get what the state is paying for it. So there's lots of rationales for that. My colleagues are probably better at answering that than I am. Let's see. Liability, great question. Yeah, this has come up in the US. Generally, when you buy a regulatory credit, you are transferring your liability for compensation to the credit developer. I was just looking at some work we're doing on this in Colombia, and there, for example, you do not transfer liability. And this, I think, is an advantage of the US markets. It's tricky because we think, I think correctly, that the impact biodiversity impacts need to be thought of as a liability and a responsibility, that they should be attributed to those who cause the impact. And it should not be easy to just cast off that liability. But if we want to have an effective market that can create real outcomes on the whole, we can do that in part by having liability transfer, because that then puts that liability squarely on another party, legally defined as such, and that ensures that the credit developer and the site manager actually have a legal responsibility to maintain that for the long term, right? And they're good at that. Whereas a company that it might be building a shopping mall is probably not best suited to manage a wetland for 30 years, for example. So many good questions here. Let's see. Couple good questions on where I think which methodologies are going to be the most chosen or the consensus. Um, yeah, I wouldn't quite venture there yet. We're going to find out. I think in some cases, brand name will matter. In some cases, there will be methodologies for certain contexts. So there's a lot coming out for terrestrial systems. There's fewer, but there are some for marine systems. So if you're working in a marine system, you're going to choose one of those methodologies, and each of these realms will have its own kind of consensus process. It is a little bit of Wild West, and I can't say at this stage where things are going to go. Um, but I think, some companies like Terrassos, like Carbo, they've developed their own methodologies that are quite good. Others are going to be doing more off-the-shelf methodologies that come from, say, Plan Vivo or Vera, and we need to test these, and we're going to find out what's really good over time. Credits and offsets. Yeah, great question there. In some contexts, the words are used in fundamentally differently, whereas credits are voluntary and offsets are regulatory. We tend to mix them in the sense that they're all credits. And if you're using them as offsets, then they are offsets. So I don't think they're fundamentally different. They should be built to the same standards, whether it's voluntary or regulatory. They should be managed to the same standards. But it's worth being careful about which one we're talking about and what the people speaking mean by credits versus offsets, because that distinction of regulatory versus voluntary is often what's in play. Oh boy, lots of good questions here. For any of you who want to follow up, my email, I don't know if it's still on the screen, but it's we can throw it in the chat. Markets being local. What does local mean? Yeah, this is about ecological equivalency. I'll give an example from Colombia and the regulatory market. So there are a variety of compensation factors. There's a highly differentiated ecosystem mapping. And of course, Colombia is absurdly diverse and super complicated. So the challenge there is, if you're going to offset a particular impact in a site, you need to be doing it with that same kind of ecosystem, but there may not be that much of that ecosystem because it's restricted already in range. It has to be at that altitude of that ecological type, of that soil type. Each country is going to come up with their own mapping. The US has different districts for the Army Corps of Engineers, and those districts then have service areas, and each market is a service area. So if you need to buy credits in the US, you have to buy them from within that same service area generally, and they're usually built around watersheds at a certain kind of ecologically reasonable scale. Questions about the US current administration. Yeah, this gets asked a lot. It's been a really rough time for those of us who want to work on and think it's important to work on ecological conservation. Because this is relying on the private sector, it has not as directly impacted just yet. I know there's been an anti-ESG push. We don't think that is going to be that impactful, especially because the global trends continue relatively the same. There's been a little bit of retraction in the EU about certain policies like the EU deforestation regulation and the CSRD. The overall trend is good, though, and companies will be continuing to disclose and continuing to take more action on biodiversity. And if that holds true, then they will find the demand for biodiversity credits, investments in general. So I don't know if that's optimistic, but it's not as directly affected by other things. And while I would want to have the level of public funding expanded, I think the fact that we can work on this through the private sector is an advantage at this particular time. So I hope that holds true. Scary questions about Clean Water Act repeal. I don't want to get into that, but yeah, that would not be a good outcome. All right, there's so many here. We have 2 minutes left. I'm just gonna pick the ones that are most fun here. Gosh, we need a voting system to get these top questions out of here. Let's see. Question from Raymond about ecosystem debt. I'm not sure I'll answer that exact question, but I think there's an argument here about if we get markets right, we can go beyond net zero. And again, the debt is incurred and impacts to a relatively intact system are extremely hard at any length of time to adequately restore. But we have to keep in mind what the status quo is and how much better we can do than that. An interesting thing about the markets in England and the US, for example, and Colombia is that the restoration often happens before the impacts, which is kind of counterintuitive. But what's happening is investors and developers anticipate demand, will go out and restore an area. And often when they do it correctly, they can restore a quite large area that maintains enough ecological connectivity at scale, better than kind of a piecemeal acre by acre. And they will do that prior to the actual demand for credits. In some systems, including often the US, there's a multiplicative factor that accounts for the fact that it's very hard to replace holistically an ecosystem. So you might have 1 acre of damage, but your credit, the prescription for the credits that you need to buy might be some multiple of that. And if we continue on that path, and we are adequately aiming for not just net zero, but those multiplicative factors, the amount of restoration will ultimately be greater than the amount of impact going forward. And bit by bit, I hope we can start to cut into that ecosystem debt, right? But it is, yeah, we've shifting baselines have been particularly bad, yeah. And any others here? Let's see. Yeah, I think, well, we're at 3 o'clock. I'd love to keep talking, but I think you all have to get back to your your classes and all your day-to-day work. But please do follow up over email. I'm on LinkedIn as well. There's only a few folks out there with my name, but you'll see me on there. I'm often posting white papers and other resources, and happy to talk to folks who are developing projects. And yeah, let's keep a discussion going. I think it's so lucky to talk to ecologists about this because I thought it might be a tough audience, but you're asking really good and useful questions, and I really, really appreciate it. So thanks very much to ESA.
And thank you, Ryan. We really appreciate you coming on. It was a phenomenal presentation, phenomenal time with the Q&A. Yeah, folks, we're at time, so we'll wrap it up. Just one quick reminder, today is the contributed abstract deadline for the 2025 annual meeting in Baltimore. So if you're feeling inspired or you do have something that you'd like to share, please do get that submitted. If you're curious about money, we do have registration grants and dependent care grants available. The application deadline for the first round of those is on tomorrow. Sorry, I was going to say on Friday, tomorrow. And yeah, I think we're going to have to consider more content like this in our programming because this was a phenomenal session. And Ryan, again, thank you so much for coming on today and sharing all that with us. Have a good one, everybody.